The Relative Strength Index was introduced to trading in the mid-70s. It was developed by Wells Wilder, and it is a momentum oscillator that measures the speed and change of price movements. Typically the RSI, as it's known, it oscillates between 0 and 100. According to the author Wells Wilder, the RSI is considered overbought when above 70 and oversold when it's below 30. We'll be looking at those signals plus divergences and how you can use the RSI to find support and resistance levels. So let's get started right away. What you're seeing on the screen is a simple close-only chart for a popular stock. Oscillators or the RSI tend to work much better in sideways markets. If you have a strong trending market either on the upside or the downside, you've got to be a little bit careful. When this indicator first came out in the 70s, people said, oh, it's over 70, I'm going to go short. Well, that's not the way to trade this particular indicator. I'm going to show you how that works right now. So the first thing you want to do is put on the RSI indicator. And we go to our below chart studies, and we go down to the Relative Strength Index, RSI, and just click it once, and then just click off the chart. It closes that window. As you can see below the chart, you have several lines and an oscillator that's going between those lines. Now the highest line is 100 and the lowest is 0. The midpoint is 50, of course, and you have the 70 and 30 marked out. Remember what Wells Wilder said, if it's over 70 like here, it's overbought, and if it's below 30, it's oversold. So you can see twice we were below 30 and once we were over 70. So these would be considered oversold right here, and this area would be considered overbought. And the important thing to look at is price action, because sometimes when markets get oversold, they can actually remain oversold for a while, and that's something you have to be very, very careful about. So let's go on to find some support and resistance areas using the same techniques we talked about with the RSI. In this example of the RSI, I'm going to show you how support works using the RSI. So first things first, we have to put the indicator on the chart, and how we do that once again is to go to the below chart studies, click once, select the Relative Strength Index, the RSI, click once, and then just click off the indicator, and there you have it. So it's a very tight line. So the key here is finding the support area. So we have a strong trend. You can see that's going up, up, up. So we want to be a buyer where it finds support. So here's the support level. This is the right in the middle. This is the 50 indicator we talked about being support. Very seldom does this market go below the 50 indicators. Every time it gets down there, it's finding support. So that's how you use the indicator to find support. Now remember, we're just using the default setting on this indicator. So, but if you move it around, you can see you can change it, make it more volatile if you go to just a short period of time. But I tend to just like to keep it either at a 10-day, or I like to keep it at a default setting of 14, which is what Wells Wilder first came up with. So again, just click off below chart studies indicator, and you can see. So support comes in here, right around the 50 level, and we'll look at resistance areas now using just the reverse psychology. If the market's going down, we'll be looking to sell it or go short. In this example, we're looking at a stock that's in a downward trend. Now you can determine the trend from some of the other indicators we've shown you, but it could be a moving average or our trade triangle technology. But the trend is clearly down for this particular security. So let's go to our below chart studies to put on the RSI, and we're using the default. We're not moving it around, just going to use the simple default at 14. Click off the indicator, and you can see every time it gets to the 50 level, it's resistance right around there, and again right around here. So technically, when it gets to obviously below here, it's oversold, and below here it's oversold, and perhaps even to a lesser degree right here. But generally speaking, in a downward trend, you want to be looking for resistance to go short, not to buy, but just to go short. And in a bullish trend, it's just the opposite, which I just showed you. So that's how you use the RSI to successfully trade in the markets. Now, it's best to use it with other indicators, such as moving averages for trend, and so forth. In this example of how you use the RSI, we're going to be talking about divergences, how they work in the market. We're looking at a stock chart, close only, and let's put on our RSI indicator, which goes below the chart. So below chart studies right here, click once, go down to the RSI indicator, click once. We'll set the default setting at 14, which we want, and then just click off the studies page. As you can see below, we now have our RSI indicator with the lines you're familiar with from 0 to 100, with the midpoint being 50. And you can see right here the prices went lower, but the RSI did not go lower, which gave it a divergence, a bullish divergence, meaning prices should begin to go higher, which in fact they did do. Now remember, we got up towards the 70 level, and again, it's not a surefire thing. You want to sell it right there, and then you want to look at the price action to get some clue as to where this market's going. Now what was a clue was the negative divergence right here. You can see prices made new highs, but it was not followed by the RSI. Then prices came down again, back to close to the 30 level, popped up again, and then came back down to the 30 again. So there's a little bit of a divergence there on the last tail end, and from there we had a pretty good move on the upside. So again, this is not written in granite. Not every signal is going to be perfect, but it's a clue as to what the market's going to do. If you use this in conjunction with some trend indicators, you can do very well with this particular oscillator. This is the RSI oscillator we're talking about. I hope you found this helpful, and I hope you find it useful in your trading in the future. Every success.